External factors can play a major role in influencing the stock price of companies that sit within your portfolio, and today I'm going to share with you 4 of the most influential external factors that will affect the price of stocks. How's it going, guys? Ryan here with another stock market video, and today we're talking about what external factors can actually do to influence the stock price of your portfolio and the holdings in there specifically. But before we get into that, guys, please remember to like this video, and if you haven't done already, please subscribe to the channel to keep up to date with all the latest content, and leave down below what are, in your opinion, some of the most influential factors when it comes to the movement of the stock price. And without further ado, guys, let's get straight into the video. So, as I mentioned, external factors that can affect the stock price. And for a lot of you may not realize these can play a much larger role than you typically expect. When we look at the world market, there are so many different factors that come into play and can affect the stock price of stocks within your portfolio, even if they're not directly related. So today I'm going to share with you 4 of those, and the first of which is market sentiment. And this is really something that is more psychologically driven than anything else. And typically you'll see that the market sentiment operates in a very different array of levels. So you'll have, I suppose, a global market sentiment, and then you'll have within your countries or within your sectors the market sentiment in those areas. And while this isn't actually a physical thing, it comes down to the psychological aspect of investors. And it's to do effectively with the confidence levels of investors with regards to how the market is going overall, what they expect to happen in the future, taking into account everything that is currently occurring going in on the world at the moment. And as a result of this, people will be either very confident, not very confident, or really, really pessimistic. So you're going to have 3 sort of levels there. In a bear market, you'll typically see that people aren't very confident at all, and as a result, they're not really buying stocks and they're playing it safe. Whereas in a bull market, you'll tend to see huge increases of volume and buying in stocks themselves. And this purely comes down to psychology once again. It doesn't necessarily have to have an actual factor influencing it specifically. Now, moving on to point number 2 with regards to external factors that influence share price, and this comes down to the economic climate. And this is the financial factors which play an influence. So for instance, you'll see that in companies or in sectors, with strong economic output due to the fact that maybe their resource is on the rise or the demand for a certain sort of product is on the rise, generally those stocks will tend to increase in value. And this might not necessarily be driven specifically related to the company, but it might be driven for other stocks within the area. So you might see, for instance, that the mineral sector is increasing and it's running off the back of something like gold or copper or iron ore, but maybe you're investing in something like lithium, but purely because you're within the resources sector itself, your stocks are also increasing in value. And this comes back to the first point of, once again, the market sentiment. When we're looking at economic climate from a country point of view, countries which are growing will tend to see an increase in stock values much quicker and much more aggressively because there is, once again, that confidence in the market. As well as that, you'll see that when the Reserve Bank, for instance, in Australia, reduces interest rates, you'll see people are buying. People can borrow money for a lot cheaper as a result of that, and they'll continue to buy. It all comes back to those economic factors influencing the country. And you'll see for Australia, for instance, when our exports are high, when we're getting good prices, and the Australian dollar's doing well, everyone's tending to buy shares and that sort of thing because they're making more money and their economic output is generally high, and as a result, people have a high level of disposable income and they will invest in the stock market. Now, moving on to the third factor, and this is something that you'll see all over the world, but a lot of focus is actually put on the US market, and that comes down to politics, the political situation of the given country that you're investing in, as well as a global scale. And when we're talking politics, everyone talks about, Dow Jones and that sort of thing. That's focused on the US markets, but that will influence any other market within the world as well because it is the main focal point. So for instance, currently going on now is the US presidential election, and Joe Biden's actually just come out and won, subject to a bit of controversy, but you'll notice the stock prices around the world for so many different stocks and markets overall are going absolutely gangbusters right now. And that's due to the fact that the politics have influenced people to be more confident, once again coming back to that market sentiment piece, and as a result people are buying more stocks. So if you take this down to another level, let's say we're looking at an individual country. So once again, I'll use Australia for instance. If you are looking at a situation where an election is going on, there's a lot of infighting typically in Australian politics and that sort of thing, or if you have politics between Australia and China, for instance, going on, trade wars, those sorts of things, they can have impacts on the stock market overall, and as a result just impact your individual stocks, even if it has nothing to do with that. So if we take that trade war example, let's say there's a trade war for iron ore and China say, nah, we're not buying any of this anymore. That might actually affect other export markets as well for the Australian economy. And as a result, the companies which are within that region, their stock prices will suffer because people have less confidence with them. Now, moving on to point number 4, and this is really the wild card of them all, and it's typically just coming down to world events in general. And this year, 2020, has been an absolutely crazy year for world events. As you know, we're talking things like rioting, we're talking COVID, we're talking wars going on, we're talking natural disasters. So many different factors can have effects on stock prices. And a great one was, for instance, in Chile, I believe it was in South America somewhere, I believe it was Chile, the lithium brine facilities there were flooded, and as a result they had to stop production, which led to a decrease in supply on the lithium market, for instance. And that's just like a small example that affects one company specifically, but can have an onflow to other companies within that same region. Once again, if we're talking about a war, for instance, you might see demand for gold start to increase because that's typically what people hedge their bets in, and during times of uncertainty, people tend to buy gold. So all these factors will then influence the actual value of stocks itself. So if we take that war example, gold goes up. That means gold prices are going to be making more profit for the miners. And as a result, their stock value is actually going to increase, even though many other stocks on the stock market may actually be dropping. When you combine all these 4 factors, you can tend to see how there are so many different aspects that are actually affecting the stock price that you may not be privy to. Now, the one thing to note is you should not necessarily be basing your investing decisions on external factors. If you're purely basing it on external factors, then you're going to miss out on so many opportunities because you're going to be freaking out about risk constantly. More so, you should be aware of the external factors that could be playing a part on the fluctuations of value for your stock price, and be aware that maybe if your stock's dropped 5 or 10%, your long-term investment, don't panic. What has caused that? Maybe it's something to do with the political situation in the country. Maybe it's something to do with the economy, and the RBA, for instance, has released some information that has meant that the stock prices are dropping and market sentiment has dropped overall. Don't base your investing decisions purely on these external factors. Make sure you're still doing your research, you're picking those awesome companies that are growth companies and are going to explode over time, because that is really what is going to make or break your portfolio overall. Just keep these external factors in the back of your mind. So with that, guys, I'll wrap up today's video. I hope you did enjoy it, and if you did, please remember to leave a like. It helps me out so much, guys, and subscribe to keep up to date with all the latest and greatest investing and stock market content. And please remember to leave below what factors you think really affect the stock prices of stocks within your own portfolio. And with that, guys, I hope you have an awesome day. See you next time. Cheers.